Ladies and gentlemen, welcome to the Midday Market Monitor. However, this day is going to be a little bit special as we can run it all the way to the market close and actually be one of the shorter streams that we've done in the last little bit. Hopefully everyone's doing well. Let's jump into it. We have another explosive day in markets, and it can be seen immediately whenever we take a look at these stocks. So, the NASDAQ up 0.3%, the S&P 500 up 0.4%. It's also not normal that Qs are usually a little bit more volatile than the S&P 500, but not today. And that is because of a little bit of a divergence in markets here. Nvidia down 1.9%, while SoFi, last time I checked it, yes, slight drawdown, was up 3.3% last time I checked, but 29.32 up, nearly 3% today. So that is just incredible. And that can almost just be immediately looked at as, okay, what is happening with the rate environment? Are we going to see a rate cut? And this is just continuing this trend. What a reversal on the thought that rate cuts are coming. Oh my gosh, for December 10th meeting, we're now looking at 87% chance of a rate cut. My background is wrong. There we go. It looks a little bit more tanner, doesn't it? I like that a little bit more. Okay, with only a 13% chance of no rate cut. And honestly, I think it should stay somewhere around this point. I mean, there are a lot of Fed governors that are questioning whether or not that the Fed policy is even restrictive at all, let alone, if it's deserving that we deserve a rate cut based on maybe slowing labor market. Now, so I don't necessarily think we're going to see before December 10th 100% chance of rate cuts, but 87%, I like those odds. I'm a personal believer that we get a rate cut one more rate cut this year, which if you are a bettor on a stock like SoFi, well, then you were happy with just, essentially 2 rate cuts as it was, because they essentially put their likelihood or their assumptions for how good they were going to do in 2025 at 1.5 rate cuts. Okay. Essentially meaning that they expect 1 rate cut, and then there's about a 50-50 chance that we either stay at 1 or we get 2. Well, we did get 2, so that's even more positive than, the 1.5 expectation. So now we're at 50 basis points of cuts this year. And now December 10th, 1 more rate cut would just push us into overdrive, right? The additional rate cuts that might come into 2026, Anthony Noto said, if we see from this point at 400 bips, we get all the way down to 300 bips on the Fed funds rate, this would just put SoFi into overdrive. So every time that you hear that we are going to see a potential rate cut, remember, look to SoFi. Look to those lenders, especially the smaller names, the ones that are highly focused on lending, consumer lending, and commercial lending, I guess, as well. But that they are going to be extremely volatile to those rate decisions. Okay, we get more rate cuts, SoFi ends up flying. We end up seeing, more of a holding back or a decision to wait on rate cuts. SoFi might end up being a little bit, bearish that day as investors take in that new news. If we end up seeing a rate hike, boy, oh boy, that's not going to be exciting. That's whenever you look to potentially rotating out of these positions. If you're a type of thematic investor or cyclical investor in that case, you get out of these types of names because rate hike environment, you go back to where we were during one of the fastest rate hikes, and SoFi was sitting in these extremely low ranges. That's literally what happened in 2022 through early 2023. Highest rate hike environment that we've ever seen. Stock bottomed out. Talk about a rip away from the momentum in SoFi stock. That can happen very quickly. Okay. That being said, let's talk a little bit more about spending. We have Black Friday, Cyber Monday. Shopify has gone above and beyond on their website. If you guys don't know, this is kind of fun. Shopify has this I'm literally just on a web page. You can go to bfcm.shopify.com, and see all of the sales that they are receiving per minute. Okay. You can see all of the orders per minute, all the unique shoppers, and it's just a fun little interactive thing. We can actually play check out some of the other information and stats for the nerds that like following this sort of stuff. But this is all built on a web page. Like it's just incredible. I find it so interesting. Anyway, so that is Shopify. I'm going to continue to monitor that. I love watching. Stripe has one as well. Shopify has one where you can sort of see their sales per minute. You'll also see Shopify on the Sphere today during Black Friday that they do the Las Vegas Sphere. They pay for rent for the day. Okay. I like fun sometimes. Dude, I really like if you go ahead and take a look, they actually follow like if you go, there's a globe here and you can see where all the orders are going and where they were ordered from. So the United States here, absolutely explosive. A lot of places in Europe here and in Australia and up into Asia and Japan here, all of it. You could see all of these great transactions. Brazil's popping off over here, sort of the Sao Paulo area. I think that's super interesting. Look at Florida just reaming with transactions right here. That's super fun. Okay, so as a Shopify shareholder, and people don't understand, this is one of the largest positions that I have in my entire portfolio. Like some of the other names that we talk about, you know, my position in Shopify is 40x, 50x larger. Not than SoFi, but it is like close to 2x my SoFi position, to be honest. But anyway, these sort of days are very important to Shopify, and whether or not they beat expectations can lead to, you know, a big percentage of the sales that they are expecting in these types of quarters. So Black Friday, Cyber Monday, good time as an e-commerce enjoyer. Okay. A bunch of people spamming Steve. Steve sent us. Okay, thank you. Thank you for explaining what the heck just happened. Welcome, everyone. Welcome. We were just talking about Shopify. But let's actually quickly transition to a different e-commerce giant, which is Amazon. I want to quickly talk about what they're expecting for their AI conference next week. We'll see what they have to say.
Let's stick with Amazon and its AI strategy as the company gets set to kick off this AWS reInvent conference next week. Joining us now is Maxim Group Senior Consumer Internet Analyst Tom Forte. Tom, do you expect them to talk more about agentic commerce?
Yeah, so I definitely think agentic commerce and agentic AI will be a key theme for reInvent next week. In addition to the company focusing on, which is something Dieter talked about and you talked about, the Trainium 3 chip, their effort there, which has double the processing power, a 50% improvement in efficiency. And then I think they're going to talk about how they're supporting the build out of AI for enterprise to the extent that they've told us multiple times this year, they're going to spend more than $100 billion in CapEx.
Do you feel like, do you feel like it's a catalyst for the stock? I know you're a buy still, right? 280?
Yeah, so the big catalyst for the stock, Sarah, was last quarter when they reported faster growth in AWS in the September quarter than they did the June quarter. It's more challenging the December because that's seasonally the strongest for their e-commerce business. So on a relative basis, AWS is a smaller percentage of total revenue for the fourth quarter. But I do think that stepping back a minute and looking at how AI can advance Amazon, I think that's why I'm incredibly bullish. So if you compare Amazon's workforce with Google, Meta, and others, they have both a large white collar and a large blue collar workforce. So to the extent they're able to use artificial intelligence to advance automation at the fulfillment center level, that's a way that they can take advantage of artificial intelligence that Google can't, Apple can't, others can't. So I think in that regard, AI is very good for Amazon over the long term.
So it sounds like you think this recent round of announced layoffs was important.
I do think that it's part of the Andy Jassy Amazon versus the Jeff Bezos Amazon, which is having margins to enable the company to both invest and generate profits on an every quarter basis. You think about the old Amazon, when they were in heavy investment mode, they would often lose, billions of dollars. And I think that's a very big difference on how Andy's running the company versus how Jeff is doing it. He's looking at both the top line and the bottom line. And I think being more efficient, including from a headcount standpoint, is advancing that effort for Andy.
Tom, where's your head right now? I guess more regarding the industry at large, and that is this balance between using cash flow for CapEx versus raising debt for CapEx. Are we in some kind of danger zone on any of that?
Well, I do think we're in a danger zone, having lived through the dot-com bubble, when I look at what's going on with AI, as far as potential overbuild. What concerns me is going back to Andy Jassy's comments on the third quarter earnings call. He's talking about AWS using gigawatts of power, and I do think that people don't talk enough about how electricity can be a gating factor for the advancements of AI. I think there's going to be a lot of blowback from consumers when their home electric bills go up 50, 100% because there's a data center and things of that nature. So I do worry about artificial intelligence, gating factors, things of that nature, potential bubbles, having lived through the dot-com one. And the CapEx spend, I think, is important, but monitoring the build out. But again, going back to my earlier comments, Amazon is still profitable while investing heavily in the business, and I think that's important.
So can you talk a little bit more about these Trainium 3 chips? Since you mentioned it, Deirdre mentioned it, we're expecting news on them, or at least to promote them at this event. Where do they stack up next to the GPUs now, TPUs, and are there any real potential buyers besides Amazon themselves, which could make it appealing, like a Google, since Amazon stock has underperformed so much?
So Sarah, the way I think about it is two ways. One, it reminds me of Amazon adding its delivery capacity, first party, to complement that of UPS and the Postal Service, kind of like having its own chipset to complement what it's doing with Nvidia. At the same time, I don't think Amazon gets enough credit for helping enterprises manage the cost of artificial intelligence. And I think offering the Trainium 3 chips can help them in that regard. And I do think it's important because I think for a lot of enterprises, they're going to focus on the return on investment spend on artificial intelligence. And I think the Trainium 3 chips for Amazon can help in that matter.
Yeah, no. So I did want to touch on what he was talking about with the debt situation on some of these AI names. We recently just got a story here that the companies that are supplying data centers, chips, and compute to OpenAI have taken on about $96 billion in debt tied to its infrastructure build-out, including roughly $30 billion at SoftBank, Oracle, and CoreWeave, $28 billion at Blue Owl and Crusoe, and another $38 billion under discussion with Oracle, Vantage, and their banks. Jeez. However, the wide stream belief in artificial intelligence gives me a lot of, safety in investing in the names that are not taking on this debt. You're not really seeing it from Google. You're not really seeing it from Amazon. You're not really seeing it from Nvidia being the collector of all that debt. They're getting their chips paid, via debt instruments or just cash, but they don't care. They don't care the money that comes in. It's Oracle's, talks with their bank where they need to figure out if they're going to be able to pay back, not the products that are being purchased via those debt instruments that Oracle is taking out. Now, are we overdoing it right now? I think it's way too early to tell. I think honestly, the types of talks that OpenAI is having, and Anthropic, and a lot of these very forward AI businesses, sort of the frontier businesses, is that we are still in the early stages, that we are going to burn through all the cash and take on a lot more debt because of the potential that we get straight employees and engineers and these sort of things, like models that could replicate what a mid-level engineer could do just from sheer code, that works 24/7, that could do multiples of what a single engineer could do during his time, and how much would you pay for that? Are you going to pay some engineer $250,000, $300,000 a year, or are you going to pay the electricity bill and the cost to produce those tokens, which might be 1/80th the cost, and take on a little bit of debt to make sure that you are the one front running those achievements? It is quite interesting. It is scary. I'm fully aware that that people are worried about an over build out. I also think that we are quite early, and to take on a little bit of debt is, no alarm bells are ringing in my ears just yet. But if you are worried, you can play the AI name without playing in those specific names. Go to the Googles, go to the Amazons. These sort of names you'll be very insulated, even Microsoft to some degree. However, you will have a large share of OpenAI whenever you buy Microsoft. Think about that as well. Okay, let's quickly take a look at the crypto markets, shall we? BMNR currently up 3.7%. ETH is flat on the day, but above 3,000 again. It sucked whenever they were below, 2,800. That was some dark days here. Bitcoin also above 90,000. Sucked being in the 80,000s as well, and even recently we touched 93,000. But a little bit of a drawback here. Let's see if this is more broad-based. NASDAQ up 0.4%, S&P 500 up 0.42%, the exact same on the day. You don't see that often. Let's take a look. Let's go to the watch list and see this from the SPYs and the Qs. Yeah, 682 on the SPY. The Q's up 0.55%, 617. Crazy. Okay, let's see what the big the fast runners of the day are. CleanSpark up 14%, FG Nexus up 11.5%, Circle up 10%. A lot of crypto names actually, surprisingly. Cipher Mining up 9.6%, Applied Digital up 9%, Intel up 9%, TeraWolf up 8%. White Fiber. Look at all these essentially neoclouds that are running, crypto names that are running. Extremely high beta names. I don't see Nebius near the top, but here is SMR, Quantum, Orbs, SBET, Venture Global. You're talking about some of the highest beta names in the entire market that is leading the charge. This is risk on if I've ever seen it. Chime is up. Venture Global is up. Shift 4 is up. These are, some long forgotten names. Rivian. Wow. What an interesting way to end out the week here. Remember, the market's closing in 42 minutes or so. Am I right on that? 42? Yeah. Affirm, D-Local, some of the payment names also seeing a little bit of an increase. SoFi up 3%. This is the increasing chance of a rate cut that's bringing in a lot of this momentum. Very, very interesting. I've been hearing a lot of people, actually, JDEC, that Rivian is a name that people have sort of left for dead and might be an interesting name to do a little bit of a deep dive on. I've been reading a little bit about what they've been doing in the R2 that's expected in the early or the first half of 2026. It might be a name worth keeping an eye on. Okay. Yeah, these are all the retail names that are pumping. I mean, Next Decade up 2.75%, Grabs up 2.7%. Let's see what's at the bottom here. And remember, this watch list that I'm following is a growth investors watch list. You're not going to see a lot of tobacco dividend names, stuff like this. I should add them just to be safe, or maybe I'll just add like the ETFs instead. Like I could put in some dividend ETFs or something like that just to monitor how the markets are doing. But IWM, actually, I'm a little surprised by that. Only up 0.3% on some of the smaller, Russell 2000 names. Okay, Webull is slightly up today. SPY's up 0.4. Fair Isaac Corporation is up. Okay. Dan Ives, the AI ETF, is up 0.7%. Broadcom's up 0.9%. Look at this. Broadcom's up 0.9%. Nvidia just bringing down the entire market. If Nvidia wasn't down 1.7%, the general markets would be up so much more than they are today. Like, this is just crazy. Google, what a day. Running up to 326, nearing those highs, 328. Back down just under this market. Robinhood just under. A lot of names in the neoclouds. You know which one I haven't seen is Nebius. 0.2. Wow, that is quite a divergence from Nebius and the other like you look at CleanSpark up 13%, Cipher Mining up 8.6%, White Fiber up 7.9%, TeraWolf up 7.5%. Where's CoreWeave? CoreWeave down 1.3%. It's like the market cap is determining the opposite of what's happening. The bigger names are falling here. That's incredible. That is just incredible. Shopify down on Black Friday. This is where you realize that markets are forward looking. Some people think that holiday spend is going to be good, so I'm going to buy into these names. No. Everyone knows about the holidays. A lot of that spend is calculated in. It's just whether or not that in those 4 days they end up hitting record highs and actually taking market share during these 4 days of big sales. That's the important part. Nvidia and CoreWeave are married. Yeah, to some degree, I agree with you. I would still put CoreWeave as a much higher beta name, but it is so funny that Nvidia is getting a little bit teared down in this market. I do not think that it is deserving at all. Oh, IREN. Yeah, I didn't even check IREN. Iris Energy down. I was just ready to say up. Down 0.4. The big names in the neocloud space are all down. Nebius, CoreWeave, IREN, and the ones that are replacing it, like TeraWolf and Cipher Mining and all of these ones, and CleanSpark and all this. Crazy to me. Do they have Black Friday in Canada? Yes, they do. I'm not a big participant, however. I don't really need for much. Like, honestly, I actually feel bad for my girlfriend. She never knows what to get me because if I just want something, I just buy it. And then, so usually the things that she gets me are the things that I need, but I don't actually want to go buy. So it's like clothes. So she has fun doing that. Maybe she's picking up some stuff for Black Friday. Okay. Let's go ahead and take a look at some more of this AI trade. If there are some companies that are at risk, Meta, perhaps Apple, these are some of the names in question. Let's take a look at what some analysts have to say and some people following the market on CNBC.
But our next guest says this holiday season could see the rise of AI enthusiasm after built up the AI fears over the past year, with research showing consumers plan to use AI to shop for gifts this year. Joining us now, Rosenblatt Securities Senior Research Analyst Barton Crockett. Barton, it's great to see you. I want to actually pivot back a little bit to what's happening in the markets, what we've seen particularly earlier this week on the Google, Meta, Nvidia trade. You were on about a month ago saying that you believe that Alphabet or OpenAI could be the next Google. In fact, the market was sort of looking at it as Google could become the next OpenAI, i.e. the leader in the AI space. So how do you read, Alphabet stock obviously on a tear the past few days. What do you see? And I think you have a neutral rating on Alphabet. How do you look at Alphabet, OpenAI, and Nvidia?
Sure. Look, I do believe that the LLM benchmark horse race is likely to be a horse race. The amount of capital, the amount of expertise marshaled by the likes of OpenAI, now also by the likes of Meta, suggests that, Gemini 3's win is not likely to be every day's win, that these other guys will come out with releases that are better. We saw some hint of that with Claude and Anthropic. So that's a different world. You see in LLMs, Google, one of the leaders. In search, they're the dominant player, the only winner. So what I think the market has done with Google is they've sprinted to the notion that LLMs, AI will be a winner take all. They've priced that into the stock. And they've looked at others and they've said, you guys are losers. And look, I would lean against that today in this way, which is I would think a lot about Meta. I think it's hard to find a company that has a clearer ROIC on AI spend argument than Meta. The AI spending has accelerated their ad growth into the 20-25% range. They've talked about $60 billion of annualized recurring revenue from their end-to-end AI performance ad tools. AI is revolutionizing the direct marketing advertising space, and Meta is a great play on that. And if their CapEx goes from 40 billion in 2024 to over 100 billion next year, that's 60 billion to spend, and they're arguably covering that just with the ARR from their performance tools.
Yeah, so I want to mention that because they are spending a lot of money, and there's been a lot of turnover in executives and talent in Meta's AI division. What makes you confident that with $100 billion in spend in the future, that they're going to get that return and that they're going to maintain some kind of lead? Because you would think they have to be in the LLM space, compete with OpenAI and Google.
Right. I mean, the argument is they've already gotten the return. I mean, they said on their third quarter call, $60 billion of annualized recurring revenue from their end-to-end AI advertising performance tools. That revenue is largely margin, and that compares to $60 billion of higher CapEx, perhaps in 2026 versus 2024. So you've covered that with the incremental revenue very quickly. And that's not providing any credit for the call options on other things like maybe personalized AI does lead to something, which is their vision. Certainly, it's helped kind of engagement from users within their website and helped them in myriad other ways. So, they're getting a great return on investment from this spend, and the market should be applauding that.
Pardon, I know enough not to think of things as zero sum, but is the money coming from someplace else? Is this whole technology taking revenue, taking business from another technology, or is it added? In other words, people weren't spending this money before, and now they're going to find ways to spend new money.
So, if you're thinking about advertising, there's this clear mega trend, right? Which is legacy media, linear television is a source of funds, and performance media, challenger brands is where the new spend is going. And, Meta dominates that. And, it's interesting. The AI has boosted their ad growth, well above what the AI has done for Google. I mean, Google search, Google YouTube, mid-teens growth hasn't really inflected to the degree that we've seen at Meta. So, it's, certainly I think all performance marketing is benefiting from this big share shift in advertising. And I think you've kind of thrown the baby out with the bathwater with the pressure on Meta.
All right, Barton, just to wrap it up, other than Meta, which clearly you favor, are there any other stocks in this category or for the rest of the year or next year that you think investors should know about?
Well, look, I mean, I think that one of the things that's going to be emerging is the idea that AI is driving a return on investment. And I think you're seeing that visibly at Meta. And I think we're starting to see that at Amazon, particularly in AWS, where they've got traction with some great new deals, with the government, with OpenAI. But also with their reInvent annual conference coming up next week, we're going to see some more news. And I think, those guys are benefiting in AWS. And I think AI is going to be helpful for their e-commerce business as consumers use their assistant tool, Rufus, and others. They're outpacing the rest of retail. And I think that's going to be a good story over the holidays.
I loved that. Honestly, I think that was the best way to look at the market. All these Mag 7 names are going to do really well. He had positive things to say about Google, Amazon, Meta. They're already seeing a return. I believe that as well. The problem is that the market is not liking any of the spend unless there is a line item of revenue that says AI revenue. But there's no line item for many companies where it says internet revenue. Like, that's the equivalent, right? So unless there's some way to immediately tell that these assistants that will be in thousands of different forms, millions of different forms across the way that they help you shop, the way that they help you convert, the way that they help you create marketing tools and create the actual visuals for the advertisements, like every single angle, from helping break down the back end analytics to helping the consumer actually see those ads, personalizing those ads. Oh, okay, Becky actually doesn't like these video type ads. She never stops for them. She scrolls past them. She never converts on them. Stop showing Becky those ads. Okay. In the other way, they could say, but she reads all the posts of the text formatted advertisements. We actually have a decent conversion on those. Now let's play around with Becky's version of those text things to try to increase those conversion rates. This is just a quick, very example. Sorry to Becky's out there for the personalized attack, but you guys love those text-based advertisements. And I think AI is just going to improve company efficiency, and that's not going to show up in a line item. So it's going to be so hard where people go, hey, you're doing so well in advertising. Why don't you stop spending and focus on the advertising? The spending is what's leading the advertising. How can you, sort of pull one from the other? There's no A/B testing the entire industry of Meta, at least as an investor. Meta can go ahead and A/B test that, and they can say, okay, these cohort of users, we are going to use our new AI enhanced models, and this one we're going to use our old school version of just, the algorithms that we had that were not LLM based and still is machine learning, but more old school in that regard. Let's test those results. Do you not think that they've looked at that and go, okay, are we really going to spend $100 billion a year, or right now, $75 billion a year, on something that isn't working, that's something that isn't A/B tested, something that they're not getting firsthand view of? Like, I think it's so funny that us as investors, okay, I'm 28 years old. I'm trying to get a grip of the market. I'm trying to understand everything. But for me to sit on my computer chair here, acting like I know Meta's business better than Mark Zuckerberg, like, shoot me in the face, okay? That would be a ridiculous statement. Let's be real with each other and say the people can get overly excited about certain technologies, and they can get a little overexcited, but not the Mag 7s, okay? I think that startups that want to make a name for themselves, the upstarts, these sort of things, I worry about Upstart because they're trying to make a name for themselves. And I'm not actually saying this about Upstart per se. I'm just picking on them because it was the first AI name that I could think of. They have to make a name for themselves in this space, so they have to exaggerate their claims. They don't have to, but that would work out in their favor. AppLovin might have to exaggerate their claims in order to make a name in this advertising space that is, hasn't quite traditionally been in that space for them. However, for Meta, they've already made it. They're $1 trillion+ company. They have every customer in the world on their platform already. That they can only mess it up. It's their business to win now. It would be up to them to lose it, So they're not going to make these exaggerated claims and spend tens and tens of billions of dollars in order to lose their market share over time or lose the capital that allows them to move quickly. They're using the capital to move quickly in what they truly believe in. And I bet you that is based on real statistics, especially whenever it's not one company versus the rest of the industry. Right? Upstart is moving towards AI, and they're saying, hey, these AI models and version 19 of our models and everything like this. And the rest of the financial industry is sort of just sitting there and saying, yeah, AI is not really good for underwriting cash flow. All of that information is already known, and we don't need some LLM to try to predict it. That's what JP Morgan, Wells Fargo, Bank of America, SoFi, all of the personal loan lenders and everything, they are not rushing towards that. That scares me for Upstart. Okay, it scares me that one company has really recognized it and all the other ones are like, no, this is going to be better for personalization and better AI insights and helping them with debt repayments and helping them with understanding how they can pay off their credit cards and all those things. All the banks, SoFis, the fintechs are all rushing towards there. Cortex with Robinhood, not AI underwriting. Only one company is doing that. That should make you think. The entire industry of the Mag 7 and big tech is saying, no, AI is going to help with advertising. It is going to help with creating new industries. Like, we are seeing this help shoppers end up getting better insights for Shopify and Amazon. And, you can name a list of a bunch of e-commerce names. But there is no one company is sort of the old guard that's holding out from artificial intelligence. They're all saying it. So am I going to be the kid at home that believes I'm smarter and bet against the Mag 7s? And in this case, the kid is Michael Burry. No, I'm kidding. But I don't know, man. That's just a little silly. I think that was a great way to say it. I'm a big fan of Amazon here. I'm a big fan of Meta. There is one company, however, in the Mag 7 that I have not gotten around to. Now, I'll be real with you. I've over-exaggerated my claims on how much I don't like this business. I've been wrong because they have been able to re-accelerate sales. They are doing some pretty good things. I just think the multiple on this company makes it so hard for me to try to get a starter position at 37 times this year's earnings. And that, I'm talking about Apple. Let's go ahead and see a video currently. Let's also see where the stock is right now. Apple's down 0.2%, 276.96, which is almost right at their all-time high. So they're doing quite well. But let's see what some investors have to say about Apple and the race in artificial intelligence.
Welcome back. Apple may be in a strong position to dominate holiday shopping this season. Some new data shows the iPhone maker drove Singles' Day smartphone sales over in China this year, accounting for 26% of smartphones sold over the month-long event. Will that momentum now carry over into the U.S.? Let's bring in big technology founder and CNBC contributor Alex Kantrowitz, who joins us here at Post 9. Happy Black Friday, Alex. Good
Happy Black Friday.
So there's a lot of commentary that this is going to be the 17's sort of chance to shine. What do you think?
Well, the early data is definitely very promising. Even in the most recent quarter, we saw a nice bump for Apple. Tim Cook is telling us that this quarter that we're in right now is going to be Apple's best quarter in its history, more than $130 billion in revenue expected. So certainly after the 16, which was such a disappointment, which was tied to AI, Apple just went back and said, why don't we make a great phone? And the 17 is an upgrade in so many ways, and consumers are really responding.
Where does it leave us on that sort of mid-year discussion that they were behind the 8 ball on AI? Is that getting repaired?
No. They're still behind the 8 ball on AI. They have benefited from the fact that AI has moved a little bit more slowly than a lot of people anticipated. Remember, about a year and a half ago, people thought that Google's Assistant and Amazon's Alexa Plus and whatever Apple Intelligence was supposed to be would be ready now. All these companies said that was going to be the case. But today, we're halfway there or not even. So AI has moved a little bit slower than a lot of people anticipated, but it's still a long-term threat for Apple. This is going to be very serious long-term.
You've also been writing about the Google comeback and turnaround that we've seen, and not really a turnaround, just this acceleration because of, Gemini and now TPUs and Warren Buffett. I mean, there have been a number of catalysts here. What's your overall assessment as to the staying power and the dominance here?
Well, first and foremost, they've done a great job on the AI front. And the way they've done that is they've centralized a lot of their AI operations and product operations really into this Google DeepMind unit. And it's not just talk. They moved 250 or so engineers from Search, which is Google's most important product unit, into Google DeepMind. Okay, and then they built technology for search that was then farmed back into the products. So typically within Google, they've had these very strong fiefdoms, the product areas that control, command and control. And so what's happened within the company is these product areas have seeded a lot of that to the AI, engine room that they call it in the middle, and that's helped a lot. The other side is on the business front, Google's search business remains unchallenged. OpenAI, though it might be grabbing users, does not have an advertising product. Doesn't have an ad tech ecosystem. And there was this great HSBC report that said by 2030 we might see $24 billion in AI advertising. Google just turned in $56 billion in the most recent quarter. So I think that's really the underlying thing, is the business is strong, unchallenged, and even if search might be losing some users to these generative use cases, Google has a product, and more importantly, the business.
Yeah, it's funny. We've made the point many times. A year ago, it was a very serious concern that they were going to lose their monopoly in search. It hasn't happened. But are we underestimating the different things that OpenAI conceivably could come up with? I mean, to be fair, it is relatively early in its life as a company.
I mean, OpenAI is going to do great, right? They already have 800 million, maybe close to 900 million weekly users of ChatGPT. They're working on a consumer product. They might build a cloud. They don't lack in ambition and buzz and honestly uses, right? But I think that in the best case scenario, this will all be additive. It's not like search will be replaced with generative AI. We'll find new uses for generative AI. And so you could have a very big Google business and a very big OpenAI business working side by side.
You don't think it's a winner take all kind of thing?
Definitely not. I mean, if you think about just the different applications, the way that you search, the way you use ChatGPT, it's really divergent.
Yeah. Finally, back to AI and Apple, because you did seem to have some concerns there. When are they going to finally figure something out?
It's going to be a while. I mean, best case scenario, mid next year. But if you think about it, the talent has left. They've gone to places like Meta in droves. I don't really know what they're working on there as far as AI goes. I don't know if they know, and that's a real concern.
Yeah, I mean, the good news, I guess, is they're not spending anywhere near the kind of capital that the hyperscalers
Look, it's
are.
much better than spending all the money and having nothing to show for it. So they're happy on that front.
Indeed. As we get to
I think Meta is going to do very well on the AI name, but I am a big believer in culture. As you guys know, I talk about it often. And because Meta is poaching a lot of Apple's, big AI names, like a lot of the brain share that they have at that business, it has to be for the right reasons. And if it's because they're flipping $100 million contracts and saying, hey, come here for the paycheck, that is not creating culture. There is a lot of really good brain share that's going to Meta, obviously, but they're paying for it. And if that's what it takes in order to sort of win in AI, there's a lot of really deep pockets. And if Meta decides that they want to start flipping, multi-$100 million pay packages to some of these employees, they could do that right back. I mean, they definitely have extremely deep pockets, and a lot of these Mag 7 names really do. So I don't know if that is what the differentiating factor in artificial intelligence is. And you even see that in OpenAI. Like, there's really smart names there, and there's really smart names that have left, but they continue to win. And there's been a lot of, in my opinion, really dumb reporting on OpenAI's demise, saying that Anthropic now has a bigger market share. And I mean, like, by a large margin. You see smart names on X reposting this stuff. It's absolute garbage. The real reports, like even Brad Gerstner put out, there's probably about 900 million weekly active users on OpenAI now. There's not another business that's even close. I mean, Anthropic's not coming close. Gemini's obviously growing, and the market share is growing there, but OpenAI is doing very well. And there's sort of these leapfrogging events. Google just put out Gemini 3, so it's the talk of the town, but let's just wait to see what, ChatGPT 5.5 looks like, and then maybe that's all the rage. Who knows? Any new news on SoFi? SoFi is mainly a talk of rate cuts. Rate cuts are coming down. Stock is flying up 3.5%. We actually just, as that video was playing, hit a new high for the day. We're now at 29.57. Or sorry, we did hit 29.57. We're now at 29.47, but up 3.5%. It's quite the divergence from other names in my portfolio, like Nvidia, down 1.9%. Someone asked in the chat earlier, but the video was playing at the time, what would sort of be the price that I would go to buy more? I need to start, I've been looking at my portfolio, right? And this is a pretty good lesson for anyone. But I went across, my different brokerages that I use. I added it all up, all of my holdings, my cash, everything. And then I also went through, all the stocks, and I tried to put them into categories. Which one am I investing in for advertising? Which ones am I investing in for artificial intelligence, software? What were some of the other ones? Fintech and e-commerce and blockchain and all these names. And I tried breaking it down. My weighting in AI names, and I didn't just put like for Amazon, I didn't just put that under, e-commerce. I broke it down by the amount of money that I had and then weighted it based on why I'm investing in those companies. So certain names like Google and Meta and Amazon were across, small bits of e-commerce and AI and, just different segments depending on each of those businesses. So obviously Amazon's a big e-commerce name, but also it's the cloud, which makes up for, the majority of their actual earnings. So it weighs pretty heavily in that segment. I am so heavily invested in AI. It makes up for over 50% of my entire portfolio. And then the rest is broken down into e-commerce and fintech and even other segments too. I've got a little bit of real estate names, and many people know I do have a position in Airbnb, and I don't know. I'm not adding to it. I don't want to cut my flowers to water my weeds. It's not been a good position. But it was a really good case that I went through and did that, because although I want to keep betting on Nvidia and just keep pouring more and more money, I'm just like, man, I'm so heavily invested in this. I need to cut my weeds. And I'm back up to 20 positions in my portfolio. Okay, back up to 20. A lot of those names are around 1% of my portfolio. Okay, they're all really small, and to the people who do have access to my portfolio, like the actual masterclass, users, that I think some of them are surprised because I talk about certain names like Shift4, but it's actually a really small position in my portfolio, mainly because it's also collapsed. The stock has fallen, but also I don't want to sell Nvidia to buy Shift4. I'm so heavily overweight in 3 names. Like really, my portfolio, I have 20 positions, but honestly, it's 3 positions. I've got a 40% position in Nvidia, 18% in position in Shopify, and around 11% position in SoFi. So between those 3 positions, that right there is, the high majority of the pie. The other 17 positions make up, the other, they're fighting for that 30%. So that is something that but it's so hard. Who am I to want to cut SoFi in this space? Who am I to want to cut Nvidia? I don't. I'm such a big believer, and that's one thing I need to work on as an investor. I suck at selling, but honestly, it's done me so well. My inability to make a decision on cutting names that are winning has only led me to make more money. And all my biggest mistakes as an investor has just been from me cutting a position too early or trimming names that continue to run. Many people know, like I was even more overweight in Nvidia back in 2019, 2020. But then as it started to run, I was trimming because I was like, yeah, I need to be diversified. When really I just have, freaking like, I was going to say a number. I'm not going to say a number, but I would be in a different place in life if I never trimmed any of my Nvidia. So who am I to start to try to make these decisions to cut back on this 40%? I don't know. And I already have, but it was to rotate into Nebius. I cut a little bit of my Nvidia, and I mean a tiny percent. Like it didn't even change the percentage really, but just to get a teaser position in Nebius, because I think that name's going to do very well. I do need stock diversity, but in that regard, it feels like diversification. I honestly think the number one company that I could buy right now, I have higher conviction on Nvidia than anything else in the entire stock market. This is the number one name for me. I think it's founder led. I'm going to lose a lot of money if something just magically happens to Jensen. If he gets sick the way that and God forbid, I don't believe in superstitions, but I don't want to bring anything into the world by saying this live or something. But Tim Cook was sick. he talked about it in his 2005 commensurate speech, but even then he said like he was, essentially cured from the what was it, pancreatic cancer, and then it came back up and he passed away in 2011. I think I have my timelines correct there. But like, you never know when that's going to happen, and there is definite key man risk in Nvidia. If something happens to Jensen, it would crush the stock. But, oh, sorry, Steve Jobs. I said, sorry, not Tim Cook, Steve Jobs. Steve Jobs in his 2005 commensurate speech. My bad. And, but anyway, I have such high belief in Nvidia. I do not want to trim it, but I am fully aware that it is such a high percentage of my portfolio. I just think it really is going to be over a $10 trillion company, and I don't want to trim that to go buy Shift 4. I mean, I like Shift 4. It's a cool name, but that would be anti everything I've learned as an investor. Sell the biggest, most innovative, fastest moving name because the market cap is high. Not even the multiple. I sit so comfortably with the multiple. It's just some people just look at the market cap and they go, "Oh, it's $4.5 trillion. How much higher can it go?" It can go a lot higher. That's the truth. That's like whenever Warren Buffett started to buy into Apple. I think his first couple buys were like in 2016. But then in 2018, he really started to ramp it. And then they broke that $1 trillion mark. And people go, oh my gosh, if people remember all the CNBC clips back then, this is a $1 trillion company. How much higher could it go, And then about like a year later, they hit the $2 trillion mark. First company, double for Warren Buffett. Then they were the first company ever in like 2022 to hit a $3 trillion market cap. Incredible. So one after another, you think you've purchased at the top, and then here we go, we found another triple. So I'm not concerned about buying a $4 trillion, $5 trillion business. If the multiple, if the numbers that they're putting up suggest that they can keep growing, that's what I'm seeing. You don't have to agree, right? But it is, another thing too, a reason for my, people say I need to diversify. Even I've seen a lot of comments here. The thing is that a lot of the way that I've made money in Nubank, in Nvidia, it's not that my book value on these stocks are all that large. It's that the companies have ballooned them to be that size in my portfolio. Shopify's done very well, Nvidia's done very well, SoFi's done very well. The companies that don't do very well, I try to cut very quickly or underwrite them and think that they're doing well and try to buy back in. But as you guys know, I don't have any cash, like I'm fully invested in the markets. I'm not believing into the hype that we're at a bubble here, not that we're in a bubble, but I'm not seeing any overblown fears or something like this that are actually going to take down my portfolio. So, I do think that some of my smaller names that make up for smaller percentages in my portfolio just haven't worked yet. And I don't want to water them like Shift 4, for example. I love Shift 4, but I don't want to water them because right now it feels like a weed. Of course, no one puts bad names into their portfolio. That's not what anyone is actively like, the term, don't cut your flowers to water your weeds is because those people are invested in bad businesses. No one thinks they are investing in bad businesses. We are all trying to put our money into things that we think are going to work. But then there's, the reality. What does the actual money, or like how are the stocks performing? I like Shift 4 up 5% today, but historically, I think we were starting to buy in the sort of, 50 or so ranges. I think it was probably somewhere around here, or maybe it was somewhere around here. But 55 was sort of the range that we started to buy in, climbed it all the way up. Jared Isaacman left, and we've been getting sort of clobbered since. But I think it's a good name, but it could very well be, and it is acting as a weed in my portfolio. So I'm not watering it. And you are right, Piyush. We are now at 29.68, up 4% on SoFi. We're about to go into a market close in the next 5 minutes. I am no longer going to ramble on about my portfolio. It's just something that I've been thinking about, trying to take a step back and look at my portfolio rather than my individual companies, look at my portfolio in general. And I am overly concentrated, even though I have 20 names, I'm overly concentrated in 3 names. Okay, I'm done. I just said I was done and then I continued. Nubank's a definite weed. We're at all-time highs. Nothing at all-time highs is a weed. That one's done very well. And most of the money in Nubank for me is all profit. My book value is much, much lower than my market value on Nubank. We've done well on that one. Let's see where they are today. Up 0.9% to $17.40. The high was $17.55 actually hit today. So is it a flower? Is it a weed? It's an all-time high today. That's a pretty good flower. Let's see here, though. The SPY, as we come into a market close half day today, up 0.48%. The triple Qs, the NASDAQ 100 composite, actually starting to outperform now, up 0.66%, outperforming the S&P 500. Let's see where Nvidia is. Are we getting any love? No. Continuing to sell off. Maybe this is the weed. But I'm not buying. I'm not buying. Do you see yourself investing in Joby? Not currently. I'd like to see some real customers. I'd like to be in one. I'll likely be in, if I'm in Joby and I can see it and feel it, I'll be a little bit more of a believer. I'm definitely more of a believer in Joby than I am in Archer. Archer scares the heck out of me, and I don't know if I even like the management or anything along those lines. All the interviews and everything, that team just sketches me out. So I'm definitely I'm more of a believer in Joby. Yeah. Okay. Next, let's take a look at the crypto markets. They are not going to come to a close, but let's still check it out. BMNR up 0.7%, trying to recover from sort of bottoming on the day. It's $32, recovering lots of volume coming into the close. $33.20 as Ethereum turns around. Bitcoin, let's take a look here. 90,700, little bit of a bounce there as well. Is that sort of broad based? Is there a little bit of there's a little bit of just a buy into the end of the week. That's pretty exciting. Anyone sweating their covered calls? Anyone sweating the covered calls here? Views on Zeta. I have positive views on Zeta, but the truth is I don't even have very many, and I wouldn't trust my opinion on that name. It's not one that I follow closely. SPY pushing into the close. Holy. Not a ton of volume, but honestly, much better than what we've seen throughout the day. The most amount of volume for the day. But today on this Friday, it still is much, much slower than many of the other days. And we are 40 seconds into the close. The triple Qs pushing up 0.8%. Let's go back, check Nvidia still down. Meta into the close, pushing higher, up 2.2%, going for 650. Amazon going up 0.1%. JP Morgan up 0.17% as well. Mercado Libre up 0.1%. Bullish. A lot of these crypto names doing quite well. Intel also pushing much higher. Lots of volume into this close here. And the market is officially closed, ladies and gentlemen. I do not have a bell. I know some of you guys, I do have a water bottle that is made of metal. Maybe I can do something here. Yeah, that's pathetic. Okay. That being said, let's just make sure that the audio readjusts to that loud bang. But A couple of MIT refugees just cringe there, sitting at home, going, "Wow, what a bell!" Is metal straw hitting against the metal container? What a guy! Okay, the SPY ended up closing out up 0.5%. Triple Qs up 0.8%. Let's look at. I don't think there's any. I think there's one company reporting after close. Am I correct? No, there's not. There's only one company that was reporting next week. So no expectations for after the close, and not like they would even be reporting anytime soon anyway. Okay, what were some of the worst names? Hyperscalers. The VIX ended up coming down. That's nice. Beyond Meat down nearly 4%. Eli Lilly down 2.6%. Nvidia, one of the worst names in the market. 176.98 in CoreWeave down to $73. Negative 1.6%. Oracle down 1.5%. Iren down 1.3%. Oscar Health down 1.1%. What a divergence on retail names, eh? Where's Palantir today? Palantir up 1.6%. Nice run into the close, 168.44. Duolingo up 1.5%. Firefly up 1.6%. AMD, what a divergence from AMD up 1.5% and Nvidia down 1.8%. What a decision that is. But there is a straight divergence in today's investments into retail names. You've got a lot of these neo clouds and crypto names at the top of the list here. I mean, quite interesting. And then at the very, very bottom, you also have a lot of these retail names: Oscar Health, Open Door, Iren, CoreWeave, Nvidia, Beyond Meat. Like, that is a crazy divergence of some of these names. Some of the highest beta names doing very well. Some high beta names, poopy doopy. Lulu had a great day also. Lululemon ended up closing up 1.2%, but falling into the close 184.18. Thank you, Piyush, for the dono. Appreciate it. Overall, it was a great week. It's a lot better than last week. I'll take this every single day. Sucks for Nvidia, but I like to see the markets return and yeah. ETH is outperforming Bitcoin now. What's going on? ETH 3,000 at 0.5%. Bitcoin is down 0.8%, 90,000. I mean, they're still sort of running in line. I bet the ETH to BTC ratio might have, changed just ever so slightly, but honestly, they're still in the exact same range all week. They've been in the same range, 0.033% to 0.034%, same range. Okay. AMD has more price share growth ahead of it. Makes sense to me. But at current prices, Nvidia is the buy. Yeah, I mean, I'm not anti-AMD at all. I don't have Oscar. I don't have any healthcare names. Zero. And the truth is that I think as a growth investor, it is a very, very good place to be. But you have to be in that space. It's not in my circle of competence, and honestly, I don't care for it to be. So that's not anti-Oscar. That's just anti-me wanting to diversify away from my two main like core investment theses, I guess, which is that AI is going to do very well and blockchain is going to do very well, and I like focusing in those areas. Okay. The 1 month chart on Nvidia is depressing. Oh, I'm sure that is. I don't even know if I want to look. Yeah, that's funny, eh? Because 1 month ago is whenever we hit that all-time high, 212. So that makes for a very depressing down 15% on the biggest name in the world. And what ended up happening? We ended up seeing the best quarter that we've ever seen. This is the real news that's changed. We've ended up seeing trade talks with China. That's gotten better. We found out that a lot of the Chinese names are actually offshoring and essentially renting data centers to get access to NVIDIA GPUs. We saw the importance in the ramp up for Vera Rubin. That was very important. We saw increase in guidance and found out that cloud GPUs are fully sold out. There's nothing to hate here, in my opinion. But yeah. Chris Patel is up a lot on his 750K play in Meta. Meta's going to do very well. Honestly, I'm not like the fact that we sold off below 600. That was the buying opportunity. It happened to Google. It happened to Amazon. And I told you guys as it was happening, I was like, you know what? People said it was hard to find these investable names. It's not like there's so much opportunity in the Mag 7. It seems like every time that one runs, Google ran, Meta went down. Okay, if I was a trader, and I'm not, like I didn't sell a single share of my Google, but if I was, I'd rotate my Google today and go buy Meta and then watch that run up. Like if I had to guess which is going to outperform going forward in the short term, I would say Meta is going to outperform Google. I mean, just the run back to the median is enough for me. And that's not cutting my flowers to water my weeds. They're both great. You're absolutely anti-AMD. You've let that be shown. No. There are companies that, like, if I had the balls to, I would short. I'm not long AMD. I'm definitely not anti-AMD in any way. I think every single semi name, sorry for just pulling up and pulling down your comment. I just kept wanting to say an additional thing. All the semi names are going to do very, very well. I mean, you probably hold AMD. And so, my philosophy or my comments might not be exciting for you, knowing that I'm constantly talking about NVIDIA and not talking about AMD. And like for me to say, they're second place, like those are just the facts, man. Like they are second place to NVIDIA. That's the truth. One's a near $5 trillion company, but I'm positive all semi names. I think all the AI names are going to do very well. And my comments about selling Google and buying Meta in terms of cutting my flowers and watering my weeds, I'm not doing that. I'm just saying if I was a trader, I think that trade would work. But like I said, there's things that I can believe, and then there's things that I'm actually like actioning, like making action towards. I'm not doing that because I'm not smart enough to do that. So I'm not going to make that call. I might have to do this, make that tall so we can actually see the whole chart. I don't know. Maybe that works. Who knows? Do you garden, Tanner? No, it's an old Peter Lynch comment. Peter Lynch said to cut your flowers and water your weeds. It was such a popular quote that Warren Buffett actually called him up and said if he could use that quote in one of his annual shareholder meetings, and he did. Okay. What would need to happen before you say it is time that you sell Nvidia? I think I will sell Nvidia. Like, one, I'd like to see a slowdown in the market, maybe not at a continuous acceleration of earnings. Like, come on now. And then I would go out and rebuy some of the big tech names with those profits. So there is an infrastructure build out, but then the cloud companies that are buying those chips will have recurring revenue, right? So I would essentially just rotate a lot of that money. And Parsival in chat actually said it last stream. So big shout out to Parsival in chat. But he was actually talking about this, how he sort of 80% semis, 20% big tech. And over the next, I think his timeline was sort of like the 2 to 3 year mark. He was going to rotate and be sort of 20% semis, 80% big tech. I think that's actually a really good strategy. I'll be doing something like that as well. Maybe not in the 2 to 3 year range. Maybe it's a 3 to 4 type range, 4-year range. But yeah, I'll be buying a little bit more of the annual recurring revenue type businesses just because there's safety in that. I don't think that Warren Buffett will ever buy Nvidia because he doesn't like that strategy. But you see him buying the Googles and you see him buying the Apples, and like there's strength in those types of names. Okay. Let's go ahead and view how the consumer is spending right now, and then we can round out the day, and I can leave you guys to your own devices as the market is officially closed, and I'll let you guys start your weekends early. All right. What? This is not it. That's not even the right page. I had 2 pages open. There we go.
But while retailers expect to see a surge in crowds, they are facing a more frugal shopper this year. With us now at Post 9 to break down the holiday expectations amid the macroeconomic uncertainty is UBS senior retail analyst Michael Lasser. It is confusing because we hear all about, the low to middle income consumer getting worse. We hear about uncertainty. We hear about tariffs, and yet we're expecting growth year on year. So how do you characterize what's happening with the consumer?
The way we would characterize the consumer is stable but choiceful, and that's been the case throughout the last several quarters and much of the last few years, where the consumer's coming out for events, and in between those periods being a bit more careful with their spending, and we would expect the same this holiday season.
Is Black Friday one of those events?
Without a doubt. The Turkey 5 holiday weekend is going to see some pretty strong sales. And then what has happened is the drop-off post those periods tends to be deeper each progressive year. And that's going to be the case this year as well.
There were questions about how deep the discounts would be because tariffs. What are you seeing so far?
So we heard from retailers like Dick's Sporting Goods and Best Buy as recently as earlier this week that they expect a more promotional and deeper discounts this year than last year because the consumer is under pressure, being really sensitive to those good deals.
And that goes against the inflationary story.
Well, what's happening is retailers are taking prices up, and that's providing a little bit more cushion to take some deeper discounts around those key events because the consumer is so sensitive to what they're spending right now.
We were talking during the break about the explosion of ads during football yesterday regarding not just retailer ads, but ChatGPT ads and providing examples of how you would use it to shop. Is the story still about long-term margin compression because it can hunt for deals better than you or I can?
Yeah, this is going to be the last holiday season before the pervasive use of agentic commerce, artificial intelligence becomes widespread. If you're not using it today, you will in the future to assist your holiday shopping experience. We're going to have agents who stand online to get those deals instead of we can enjoy some warm weather in the holidays. It is going to make it more competitive because some of the pricing will become more commoditized and much more attuned to everybody. So retailers are going to have to adjust to a different environment quickly.
Well, how do you see that adjustment playing out? Let's call it over the next year, given you think a year from now we're going to be having a somewhat different conversation.
We are going to have a different conversation. They're going to have to continue to evolve the profit pools. For example, retail media trying to sell advertisements has become so much more important to the profitability of retailers. You've heard that consistently over the last few years. That's an example of how these retailers are trying to adjust their models in a world where pricing becomes more ubiquitous for every retailer. So we're going to see that become much more important over time.
Who's the winner?
Who's the winner? Yeah. It's going to be the large, well-positioned players like a Walmart, a Home Depot, a Costco. Those are three retailers that continue to stand out, lead in the deployment of technology to assist
What about
the
Target?
consumer.
You didn't mention it.
The Target is quickly trying to change and improve its performance. We believe as far as the stock, the probability of successful improvement with Target is greater than what's being priced into the stock. So that's why we still like the stock from here, but it's no doubt had some difficult times as of late.
Yeah, I think about, what I want to buy is some of these retailers are nice. You could see me in the right environment end up purchasing a name like Walmart. I don't know if you'd catch me buying Target. I think there's just an execution difference there, and there has been since I've been alive and focused on the markets. Okay, last video, and then we'll wrap it up. But I just saw this come across, my news feed here, and I want to check this out. What's going to happen to the markets over the next 4 or 5 months? We'll wrap up here.
As we get to close out November, the Nasdaq is poised to break a 7-month win streak, while the Dow and the S&P both look to avoid snapping 6-month win streaks of their own. What might we expect in the final push into year end? We're joined this morning with his outlook, Morgan Stanley Wealth Management Senior Vice President Jim LeCamp. Jim, it's great to have you back. Thanks for being with us.
Of course, good to see you.
I like this analog of a bull, but a rodeo bull that might kick you off.
That's been the problem. I mean, it's been a very volatile market, a very news-driven market, particularly in the AI space. And that's why you saw technology sell off in what is historically a pretty good month in November. But the market overall, the set of conditions is really pretty strong as we look towards the end of the year, on in probably through the end of February, where the seasonals can change. But we've had big buyers start to come back into the market. Last Friday and this Monday, we saw a huge amount of volume from the hedge fund community come in. And we don't have a big news cycle in front of us this month. That might bring some low volatility fund money back into the mix as well. We're seeing also most likely a Fed cut in December. Morgan Stanley doesn't think it'll happen, but if you look at the Fed funds futures, they're now saying an 86% chance of a cut, and we had comments from Waller and other Fed governors this week that suggested as much. So it would be very unusual for a market in a seasonally strong time of year with the Fed cutting rates, earnings on the increase, productivity and margins on the increase, for a market to have a weak time frame. I think the market looks pretty good, at least for the next 4 or 5 months.
I was going to ask you if you were taken by surprise at the House view on no cut in December.
Well, sometimes they're surprised at what I say, and sometimes I'm a little surprised at what they say. But look, there's been a lot of changes, and this is one of the reasons it's been a little bit of a rodeo bull, is because the news can be very contradictory. Like this week, we saw a couple of reports, the PPI and the home price index, that showed inflation was very much in check. The previous set of signals showed that inflation was picking back up. So I certainly understand how a house view can change from time to time, and the news cycle can change that right back. But right now, it's a very fast and furious news cycle, and that's why it is more of a rodeo bull. But I do think it's still a bull. The trends have not changed. We saw the Nasdaq break back above its 50-day moving average after undercutting. So the trends are all still in place.
So what are you telling your clients, the private wealth clients at Morgan Stanley? Is it just stay with it? Is it add to exposure going into 2026?
It's a great question, Sarah. There's a couple of things that investors need to be mindful of. There is some rotation going on in the market. We've seen some value areas like the financials, the energy stocks, and others, and particularly healthcare, in the value side of the equation really start to reestablish some relative strength. Today they're doing well. Over the last month, they've done well. In terms of technology, the growth is still there, but these stocks aren't cheap. It may mean that they need to consolidate for a while, give up leadership for a while. And we're also seeing some bifurcation in these tech names between the profitable names and the unprofitable names. And I think investors need to stay away from unprofitable names. I think they need to stay away from meme stocks. I think a lot of the fluff is being removed, while underneath we still have a healthy market.
Jim, I know you pointed to some fiscal tailwinds going into the new year, but you also point out that midterm years in general aren't all that hot. Does that mean that any performance might be front-loaded?
That's a great question, Carl. So historically, the second year of a presidential cycle, you get quite a bit of a correction. Typically, it starts in about mid-March. So I think we need to be mindful of it. But you also have to watch what the market is doing in addition to what you think it's going to do. For instance, this coming year, we have tax cuts that will be kicking in, and we have a deregulatory cycle. That might ameliorate the typical weakness we see in the second year of a presidential cycle. Also, this rotation that we're seeing, it may mean that we just need to look at these other areas. I still like some areas, though, that have been strong, and that would include the metals. We still have an outlook that's pretty positive on the metals. Yeah, they're going to be volatile too. And I think some of these energy plays can satisfy both the AI growth story and the natural resources, more of a value story, because we're going to need more energy, whether that's nuclear, and we like nuclear, or natural gas, or some of these areas that are supporting these data centers and the growth there. The CapEx plans are still there. It just may mean that some of those areas got ahead of themselves, and other areas we can still play.
Jim, you think we can have, are you telling clients that we can have another up year next year, like a 16% up year, which is where the S&P is, 20% for the NASDAQ?
Anytime you say we're going to have another 16% year, you oftentimes regret those comments later. However, in answer to your question, I think we can see an up market next year. I think it'll be maybe more sedate. I think GDP growth is going to be more sedate, maybe just above stall speed, maybe somewhere around 2%. But I think we can see a market that goes higher. But it may mean that we start off good, we digest the gains in the middle of the year and rally again towards the end of the year. I don't think it'll be as smooth and steady. This is an economy that has some ankle weights around it. So we're going to see some news-driven events that can create that volatility. But I think by the end of the year, we will probably be higher interest rates at 4% on a 10-year Treasury, for example. They're not going to be too exciting for investors. Corporate bond rates have come down. So I think from an asset allocation standpoint, stocks still look pretty good.
Some of those comments I was a little confused by. Jim said that, he's not touching any of the meme names right now, but they are positive on AI, robotics, healthcare, space, nuclear. I think he even made positive comments on crypto. What is, I feel like the meme name is so overblown. To me, that just means highly favored retail names that are a little bit more speculative. All those areas are really speculative, but overall, I do agree that I do think that we, through the end of the year, definitely, I'm seeing bullish sides. I'm not good. I'm not doing technical analysis here. I think December is going to do well. A lot of that might be tied to rate cuts. Maybe this is a buy the rumor, sell the news type event, but that's why I have names like SoFi and stuff like this, because they are just fundamentally going to do better in a rate cut. People can sell that off, but the actual financials are going to be highly improved by that. Like the chance that we get a 40% plus year over year growth rate next quarter is, that will be benefited by a rate cut decision. And it seems like, oh, well, there's only 20 days left, but the chance of a rate cut, going into a rate cut, a lot of the insurance companies, hedge funds, pension funds that are calling them up for their loan platform business are going to want to front run that decision. So even the talk of a rate cut is going to lead to more sales for SoFi. Little short trading day today. We will be back at 10 p.m. tonight, unless something changes. I'll update the people on X or on Discord if anything else changes, but expect a 10 p.m. live stream with the boys, the FinTech Friday show. But aside from that, no, good week. Let's continue it on and focus on the fundamentals and the actual news and don't let the fear mongering decide the way that you're trading this type of market, because you'll think that the lows continue to drop lower and they don't, right? Many people called for doomsday, like they were going to get shares of SoFi. Remember the infamous comment that we put up on stream, like $18 of SoFi is where we're heading. That's when I'll buy back in. Okay, well, you sold. Now we're back up to 29. So how'd that work out for you? 10 p.m. Eastern Standard Time. Yeah. Parsival, hey, if you like big tech, you do not need to get interested in SoFi. It's definitely more of a name that I like, and I like the management there. One thing for sure, because I've gained a lot of new viewers because of the recent talk just on big tech and the way I feel about AI, and that still is the high majority of the way that I invest. I do like fintech and e-commerce and spending for consumers. Like I like following all that data. I find it so easy. You can still find a lot of alpha and fear radiates throughout those markets. If people think that the market's moving one way versus another, that there's so much alpha there, like you can get into positions at extremely low rates and they can ride very high. Look at SoFi. Like, I like Chris Patel. He's going to catch a stray here. Okay, so I apologize, but he called SoFi a bank the entire time. Sold it at 10, said it was overvalued. Then now here we are, 3 times higher than that. It's like, no, there was a ton of alpha there, and Chris still had a good trade from 5 to 10, but I preferred my trade of 5 to 30. That is important. There's a big difference there, and I think it's going to go a lot higher. By the way, I love Chris Patel, but he's not right on everything. Well, he did the same with Palantir. So did I. No one's perfect. I sold Palantir early. So yeah. That said, what was I highlighting there? Oh, sorry. I just like fintech. I love e-commerce. I love these spending names. They're so easy to understand. There's not, especially in the payment space and the e-commerce space, e-commerce especially, like that is so easy. Like it's so easy to understand Shopify's business, Amazon e-commerce business. There's some things in banking and with credit and with payment authorization and ostracization as well. Like there's a lot to understand there, payment priority, but yeah, I like it a lot. Tanner, how do you feel about SoundHound? I just don't like that. That's another one I just don't know well enough where what is stopping a Gemini or an OpenAI from starting to get into these voice models? I just think will we even need, I don't know. Like in the application era, there was a ton of stuff in the internet where it's like, okay, this new service comes out and then there's 100 companies built on those services. I'm not even sure if AI is going to be that way or if it OpenAI will just be able to go directly to businesses and say, here's our voice model. And we were able to craft this with our top models just by prompting it to say, hey, you are now a voice robot at a Wendy's and you need to take orders based on this menu that we're giving you in a CSV file. Be polite and send this information to this computer. I'm not so sure how hard that's going to be 2-3 years from now. And then it's just a matter of pricing. Is SoundHound or OpenAI going to be able to price better? And I would put my money on OpenAI. But yeah. Okay. Will we need OpenAI? I personally think we do. I think there will be multiple winners on the LLM front. Claude has definitely focused on more of the enterprise, the code side, Gemini and OpenAI. I'm sure there will even be more winners than that. But those 3 are looking, they are cementing themselves to some degree. Okay. Ladies and gentlemen, thank you all so much for watching. If I can do a quick plug, Fiscal AI, for those that have been looking into the name, They are doing a Black Friday sale. They do, I think, like one sale a year. So if you guys were interested, if you guys don't even know what I'm talking about, disregard, you can leave now. But they never do sales. So if you've been interested in Fiscal AI, this is your only time to get 30% off. Before, it was really only 15% off for my exclusive promo code. So Fiscal AI/future, 30% off until December 1st, I think. That's it for me. Thank you all so much for watching. Really do appreciate your time, and bye for now.